Only 3 times in history has the S&P 500 gone down 4% 3 days in a row. The last time this happened was the Great Depression. And so it's really time to take a step back and consider what exactly is going on now. I've done a little bit of nibbling, but I've got a fair amount of cash sitting on the sidelines, and I'm trying to decide when exactly should I put it to work. But the market is not giving me buy vibes. And I'm going to go through that with you guys very carefully. I'm going to let you know what it is that I see in the SPY right now. We're going to talk about Bitcoin, and we're going to look at some other charts that give us a clue as to what to expect next. Today, money was actually best made if you took calls on the rip on the fake news event in the morning. What news event is that? Well, out of nowhere on CNBC, it seemed to come in as perhaps an early breaking news story when that Donald Trump was going to kick the tariffs down the road 3 months, 90 days, excluding China. And it became a buzz and it was being talked about. And all of a sudden, everything turned green and retail swept in to begin to buy the rip. But as they reached out to the White House, they said, well, that doesn't sound quite right. They checked in with the president, asked him if he had tweeted anything that they hadn't been informed about, because you know that does happen. He said, nope, that's fake news. And the markets then turned around and sold off. Now, it's been a roller coaster day because right after I started making this video, I noticed that we had run up a little bit. And as we were getting closer to the close, we were running back down. Is this market bottomed out today? Was this a huge buy the dip moment for the next couple years? That's what's got to be considered, because the fact is, if we could time buying the bottom, there's so much money and opportunity to be made here. We know that these magnificent seven will not stay down forever because they're great companies filled with cash with a global reach in the middle of a tariff war that is yet to be worked out. But the minute that tariff war gets worked out, we know these guys are going to continue to be winners and continue to make deep profits and increasing revenues for years to come. So it's very, very choppy out there. And if you've been buying it, you've definitely seen red and green today. And you're probably wondering, where is it going from here? Well, let's talk a little bit about how things are going. The S&P 500 is officially in bear territory, down 20%, and the QQQs are on its way to recession territory, being down 25%. Now, here's another dynamic that I found very interesting. It's the PE ratios. You guys have been hearing for most of 2023 and 2024 that stocks were expensive. Well, not all of them are that expensive anymore. Google, Microsoft, and NVIDIA have a lower PE today than they did on the October 2022 lows. For example, back in 2022, NVIDIA had a PE of 63.49, and that's right before the AI story really took off. And right now, PE for NVIDIA today is at 32, cut in half, wiping out in entirety the AI story as if it never even happened. So where is all of this going? Well, I'm going to break it down for you guys. This is the Stocks with Josh show today. I've got some interesting charts to go over with you guys and an interesting perspective to share with you. This is going to be an interesting video. I know I'm going to get a ton of comments on it. I'm going to avoid the politics, but we're going to get into the big actors, and I'm going to speculate as to what they're doing and why. Again, thank you for hitting the like. Thank you for dropping a heart, just saying hi in the comments, and hit the subscribe if you need help trading these choppy markets. Let me briefly comment on the Stocks with Josh Discord. In these turbulent times, I'm providing each and every day 4 A-plus trade setups for people to simply take on the cross of price. If you had taken any of the A-plus trade setups that I put in the Discord before the market opened today, all of them, every last one of them would have printed you a 100% profit if you had entered options simply on the cross of price. Now, that sounds easy. And today it was easy because these markets are volatile, and these moves, whether they're breakups or breakdowns, are giving us huge moves and huge profit opportunities. It isn't always that easy. It becomes way more difficult in a sideways trading market. We're not in a sideways trading market. We're in a market that's either rocketing down or bouncing higher at any given moment. And so this is a very profitable moment. Interestingly, today's profits were made with calls. And so that's a little bit of a change because largely they've been made with puts. Having said that, do I think that the bottom is in? Well, I'll lay out that case here over time in this video. Thank you guys for smashing that like and hitting the subscribe and joining the community. And I'll leave a link in the top pinned comment to come join my pro trading community and education community called ChartGoat University. I'll leave a link for that. It's the name of the show, www.StockswithJosh.com. Okay, so let's talk about what happened today. Lies and manipulation. Fake news in the middle of the market day got everybody excited and started buying again, even though nothing has been worked out on the global stage and we are still in the middle of World War tariff. So I want to just kind of take a step back and let's re-examine who the big actors here and what is it that they want out of this, okay? The big actors here, and I'm going to call them actors today because they're genuinely acting, okay? It's Donald Trump and Fed Jerome Powell. I actually think they're on the exact same page. These guys have buddied up because they both have the exact same goal, or at least their goals have aligned. And you're like, Josh, what are you talking about? I thought they were in opposition to each other. No, not if you really take a step back and consider what has to be done, because the one thing that would give them both exactly what they want is if the markets crashed, okay? It would bring inflation down if the markets were immediately put into a contraction event or a black swan event where people had to get laid off and money couldn't be spent and people had to drop prices very quickly because they were concerned about the loss of sales. That would immediately bring inflation down, and it would allow Donald Trump to get what he wants, which is a reduced interest rate. So both of them are going after the exact same thing right now. Even though Fed Jerome Powell is acting like he's going to be tough and hold the rates higher for longer, that's what's increasing the drama and the turmoil, which is crashing the markets, which is allowing some people to make a ton of money. And have they gotten it to where they want to get it yet? No. Why do I think that? I think they're greedier than that. I think that there is more fear to be pumped into this market. And as a result, there's more room to bring these stocks down faster and further to a place where it would make more sense for powerful people to pile back in. The roller coaster ride isn't over just yet. So here's exactly what I'm saying is happening. One, I don't think the market is done crashing. Two, I don't think that Donald Trump and Jerome Powell are arch enemies. I've indicated that in the past. This is a change of view on my part. I've begun to realize that Jerome Powell is acting as if he doesn't want to cut rates so that he can keep this drama alive. Donald Trump is acting like his biggest priority is these tariffs, when in truth, both of them have a problem ahead for the markets, and that's simply refinancing the debt. You've heard me talk about this before, and at one point I largely thought it was Donald Trump's problem, but now I realize that Donald Trump and Jerome Powell's goals are aligned. They have over $9 trillion of debt coming due, and the fact is, without that getting refinanced at a lower rate, it would be absolutely crippling to this economy. And it wouldn't really matter if this problem doesn't get worked out. And I think Jerome knows this. Fed Powell knows this. If this problem doesn't get worked out, he's not going to have a job because the economy is really spiraling out of control. And you say, well, Josh, that's very dramatic. Do you have any proof or evidence of that? Well, let me show you. Let's go into this chart. So let me explain to you what we're looking at. We're talking about the interest rate payments that we have to put out on our debt every single year. Now, in 2023, we were paying right around $900 billion. People were talking about the fact that we were getting close to $1 trillion. In 2024, we actually spent $1.2 trillion on interest alone. Our debt is climbing, and we're having to refinance old debt simultaneously, and it's projecting that we would actually have to pay $1.5 trillion in 2025 if we did not refinance right now. And so we have here in the United States a very, very big problem, and they're not going to talk about it on the news. And Donald Trump is not going to directly address it, and neither is Fed Jerome Powell, because if they did, it would significantly negatively impact us on the global stage. It would give all of our enemies more leverage in negotiating against us because we're in a precarious spot with the dollar based on the fact that our economy is slowing down and we do have headwinds ahead of us. I'm going to get into that in just a little bit. And then we had runaway inflation, which we had to deal with beginning in 2021, and it still hasn't brought inflation down. It wasn't enough. And so what did the powers that be conspire to do? Well, they decided they were going to create an event that would force the economy to slow down and force Wall Street to come to its knees and force rates lower. And the fact is that Donald Trump came out as one of the big actors here in Washington, parading his big chart to everybody, talking about how imbalanced the trade was. And yet anybody can see right away that we're only going to stand to make around $300 billion while the market just took a near $11 trillion hit. The fact is, what's really going on is we have to bring these rates down, and we simply can't wait for inflation to cool off naturally. We have to bring them down right now before June, before that $9 trillion comes to get refinanced. It has to be done with lower rates. And so these two big actors have gotten together on the global stage, and they're pushing this narrative, which confuses a ton of people who are sitting there, wagging their finger at Trump or wagging their finger at Fed Powell. Why don't you lower the rates, when the two of them, in my opinion, are working together, conspiring to produce this entire event. And they can't tell the American people exactly what's going on because it really would cause us to lose both credibility and strength. The dollar's in trouble, inflation's a huge problem, and GDP is potentially slowing. Now, there are many more facts to this that I would love to unwind, but I'm going to get into the charts and talk about how we can make money in this environment and where I think we'll ultimately go. I'm telling you guys that I don't think the crash is over yet. I think that even if we have some up days, I don't think the problem is solved until the Fed can come out and give that rate cut. And when he does, I would expect the markets to absolutely explode to the upside. Now, in the Stocks with Josh Discord, I covered all the technicals for the Magnificent Seven, and I included Netflix in there, and I told everybody where the support levels were below. About the only way to handle this volatile market is to have a buying plan where you buy at these key levels. You're not going to want to lump sum at any given level thinking that you can catch the bottom because we have no idea how far this entire situation is going to be pushed. Now let's go look in the charts for the number one clue as to what to expect for these markets tomorrow. Now, traditionally, the VIX, if it ever gets up to this near 50 level, it is absolutely a good time to buy. And that's why I said to you today that I dropped those support levels for all of the Magnificent Seven, because we're up here at a level that volatility rarely reaches, that always leads to profits. Yet, do I think that this particular market is getting ready to cool off? Well, it's entirely unknown, but the only thing, as I've said in this video, that would cool it off would be an emergency rate cut from the Fed. That is the only thing that would calm these markets down. But I want to point something out. We got as high as 65 here in 2024 when this tariff war wasn't even happening. And here we are, we got as high as around 60 just today. But we are in the middle of a major unresolved tariff war. And so just using some basic logic, it would appear to me that in this unresolved environment that would be much more severe than the news that we were dealing with in 2024, I think that this tells us that we have yet to see the absolute highest peak in volatility. Now, the other timeframes in which volatility got way higher than this basis line of around 50 was the COVID 2020 peak. And then after that, the 2009 Great Recession. And until this thing gets resolved, it is way more characteristic of those two events. And as I led at the open, it's actually characteristic of the Great Depression right now. It's doing things that were only done either during the COVID sell-off or the Great Recession, okay, of 2009. So this is something we've got to take very, very seriously. And you don't want to go all in. And in my opinion, I'm not going to carry any leveraged positions overnight until we get confirmation that we've officially blown out the bottom and are recovering. And the only thing that's going to confirm that the bottom is in is when Fed Powell comes out and gives a really big, fat 50% rate cut. And unless he can justify that soon, the markets are going to remain extremely volatile. Let's go look at the possibility of where these markets could go. I'm going to take you into the SPY, and then we're going to talk about Bitcoin. This is an extremely, extremely ugly wick on the top of this candle. And to me, this says that the bears are in charge. And the volume is high and the volatility is high, but this is not a market that looks to me like it's moving strong in reversal. So let's go back in time. I'm going to put the weekly time frame on the chart, which means that each candle is a week in the market. And we're going to look at a couple trend lines. Is it possible for this particular environment to give us a deeper and more extreme pullback? This right here is the 2009 Great Recession, and right here is the 2020 COVID sell-off. And here we are very, very far away from that underlining trend line. So that just should warn everybody that until we get that Fed rate cut, there is a huge, a bigly and huge move that could potentially come that would bring this SPY all the way down to this long-term support line where we were facing similar significant economic events in a market that was acting in similar ways. And so, believe it or not, we could only be halfway through this sell-off. Let's look at these percentages real quick. If we go to the top of the COVID, we go down to this line, it shows that the markets roughly went down 35%. If we come over here to the top of this line and we come down to our trend line, this would be another 35%. So it would be a very similar move to the move that occurred in 2020. And so I guess what I would say to you guys is that at this moment, I am still just nibbling. I'm not panic buying this market, even though we've seen these incredible 4% drops on the S&P 500 and the Magnificent Seven seems wildly cheap as far as their PE goes compared to what it was in 2023 and 2024 until the market gets to where it needs to get, which is a huge rate cut with a president who's able to refinance debt, which would allow them to spend more over the next couple of years. We are at the point, without a doubt, that these presidents have run out of money. And so if they simply print more and put it into the economy, it's going to cause inflation to rage out of control. I think the powers that be know that this is a very serious situation, and the only way to address it is to have a very, very hard brake applied to this economy, get those interest rates down, refinance the debt, and then do everything in their power to push it forward and to speed it back up. And I think that Donald Trump intends to do that. So he's participating in this tariff war, right, which seems like the focal point of everything, but really it's all about the rates right now. It's all about bringing those rates down. Let's take a quick peek at Bitcoin. Now, before I get into that chart, let me just tell you guys where we left off. My last video, Thursday, Bitcoin was at 82,000, and I came out and said, guys, this is your announcement to let you all know that Bitcoin is getting ready to fall off the cliff. It's going to precede the sell-off this coming week on Monday, which is today. I gave this video on Bitcoin predicting the sell-off on Thursday when price was stable at 82,000. Let's go look at the charts and see exactly what happened. So right here at 82K, before we got below it, I told everybody we were getting ready to sell off. and my target was 73K. Now we came all the way down to 74,200 roughly, and now we're getting a doji in an area that is somewhat a level of support. And so I predicted this based on some other charting and some candle structure that I went over on Thursday. If you want to understand that better, you can go back and watch Thursday's video. But the fact is, it did it. We have had this massive sell-off. We still have a red candle. I want to point out a couple things to you. This is the main point I want to bring to you today on Bitcoin. When Bitcoin was pumping back here, okay, I just want you to look at all these massive green candles. Right even at the beginning of the move, there's a huge green candle here. And they only got bigger and bigger and bigger as Bitcoin continued to climb. If the market really wanted Bitcoin right now, why is the biggest candle on this chart a red candle? And so you're going to hear me say this a lot. You've heard me say it in December, January, February, and March, right? You've heard me say that a bull run consists of three things. Okay, price, which is direction, volume, which is strength, and then momentum, which is acceleration. That's what a bull market has to have in place for it to be a huge buy and hold signal, right? And I'm going to come out here and tell you guys that from Thursday to Monday, my prediction was straight on, but I still don't see the buyers. I don't see the buyers on the S&P 500. I don't see the buyers on the Magnificent Seven, other than what could be construed as retail buyers who might have flooded back in a bit early. They'll be paper hands. They'll be the first to dump their shares on Tuesday if the market begins to reverse. I see a ton of potential here for the market to go lower. Now, that doesn't mean that tomorrow's going to be a green day or a red day. I can't predict that. I can just tell you that what needs to be in place for this market to rip isn't in place. And this game that the Fed and the president are playing, this illusion before the American people, these actors who are really redirecting to tariff wars, which are a problem, but people are saying that Donald Trump is foolish. Why doesn't he know that he shouldn't be fighting the entire world at one time? He knows that. This was planned. He knows exactly what he's doing. This has been agreed upon by the powers that be, that this is the only way to justify getting that rate down really 50 to a full basis point in the next couple months. Otherwise, it simply cannot be rationalized because the economy was still doing so well, holding on to a lot of that money that had got put into the system over the last couple of years, ever since 2020. And so this emergency situation had to be created. And this is the only thing that's going to open up the economy to rip later on, potentially in 2025 and 2026. Now, I'm going to share one more thing with you, and that's what will happen when this market finally bottoms out. How quickly will it recover? Will it be a V-shaped recovery? I'm going to say yes. However, the more extreme of a sell-off, the more cautious the buyers will be when they eventually step in. And at bare minimum, you're going to need 90 days. So that's a new prediction. And I can't remember when any of my predictions have not come to pass, the big predictions that I've given, okay? I'm telling you now that based on going lower, if we continue lower from here and we get that full 35% on the S&P 500, okay, it's going to take us a bare minimum of 90 days to get a recovery from that. Now, that's not all the way back to the top. That's more of a slower move higher. Why am I sharing that with you? I want you to plan accordingly. Consider any of the call options that you're getting into, that this recovery will look somewhat like a V. However, depending on how deep the sell-off is, that takes a little bit more time, potentially. So I just wanted you to be aware of what I'm taking into consideration when I'm looking at my long call options. I'm trying to make sure that I'm at least 90 days out to get the biggest part of that move. Guys, it could take some time. Do you think I've gone full conspiracy theory here on YouTube, or is this clearly what's happening and it just took us all a little bit of time to realize it? Let me know in the comments section. And I'm going to tell you right now, every single day, my best trade plan is simply to take my A+ trade setups that I prepare for everyone who joins the Stocks with Josh Discord. They're available for everybody on every tier. There is someone for you to live trade with 5 days a week. So come check it out. Don't sleep on the Stocks with Josh Discord. We're going to continue to make money no matter which direction the markets go. And I have not gone all in yet. I'm waiting for a little bit more of a pullback. And people are wanting to know, Josh, what leap do we buy right now? Well, I think, and I could be wrong, okay? I don't have the crystal ball, but I still feel the need to err on the side of caution because I don't see the volume. I don't see the green bars, fam. Let me know what you think. Let me know. We're going to get all the buys in here. It's not going to take long. They're coming. It's right around the corner, but we don't want to buy prematurely, or we don't want to load the boat while the boat's sinking. We got to make sure it gets plugged up and is sound before we put all of our cash into it. That's what I'm thinking. Let me know what you think. Peace and blessings. Take care. We'll see you in the next video.